All right, let's dive into the mind of a true master. We're talking about the investor who took a failing textile company and turned it into one of the biggest, most successful conglomerates on the planet, Warren Buffett. And we're going to uncover the surprisingly simple ideas behind all that legendary success.
So just to put things in perspective, let's start with a number. That number you see there, that's the return for Berkshire Hathaway from 1964 to 2003. Now, over that same time, the S&P 500 did great, a 4,700% return. But Berkshire, a staggering 259,485%. I mean, how is that even possible?
Well, this quote right here, it gives us our first major clue. A huge part of his secret is that he invests in amazing businesses, and then he trusts the people running them to do their job. It sounds almost too simple, right? But believe me, it is the absolute foundation of his entire philosophy. So that's what we're going to unpack here. We're going to look at the mentors who shaped his thinking, break down his 4 core principles for every single investment, and then we'll get into the mindset, the psychological superpower that really ties it all together.
You know, to really understand how Buffett became, well, Buffett, we have to look past the billions and get to know the man. And his journey starts somewhere you would probably never expect. Not with some innate financial genius, but with a really, really common fear. Can you believe that? The guy who now commands a stage for hours in front of thousands of shareholders was once terrified to speak in public? And this isn't just a fun little trivia fact. It's so important because it shows his success isn't some kind of magic. It's the result of identifying a problem and then systematically working to fix it. And that's a skill he uses for everything, especially his investments.
And just look at his approach. It's so methodical. First, he admitted the fear was holding him back. Second, he invested in himself. He spent $100 on a Dale Carnegie course. And third, he practiced. He just did it, over and over, even when he was terrified. He treated his own fear just like an investment problem. Find the issue, find the solution, and then execute. He saw what he called a 1-foot hurdle, and he just stepped right over it.
Now, Buffett didn't just invent his philosophy out of thin air. Not at all. He was a student of the game, standing on the shoulders of giants, and he took the best ideas from the masters who came before him.
The whole journey really kicks off in 1949 with a single book, Benjamin Graham's The Intelligent Investor. It completely changed his life, so much so that he went to study under Graham personally. Then, about a decade later, he meets Charlie Munger, the man who would become his partner and intellectual sparring partner for the rest of his life, always challenging him to think bigger.
Okay, this is where Buffett's real genius for synthesis starts to shine. He took 2 ideas that seemed totally opposite and he mashed them together. From Ben Graham, he learned to be a bargain hunter, to look for what Graham called cigar butts, basically beaten down companies that had one last good puff left in them. But from another investor, Philip Fisher, he learned to look for amazing quality, great companies with incredible long-term futures. Buffett's secret was merging Graham's obsession with price with Fisher's obsession with quality.
And Charlie Munger was the one who really pushed him to make that leap. Munger convinced him to buy See's Candies, a fantastic business, but for a price that was way higher than the old cigar butt Buffett would have paid. And that one decision was a complete game changer. It totally shifted his thinking from just buying cheap companies to buying great companies at a fair price. And that thinking is what led him straight to giants like Coca-Cola.
So how does he actually do it? Well, it all boils down to a pretty straightforward 4-part framework. You can think of them as Buffett's 4 lenses for looking at any potential investment.
First up is the business tenet. Buffett's #1 rule is so simple. If you can't understand it, don't buy it. He loves to find businesses that are so simple that, as he says, a ham sandwich could run them. This is his famous circle of competence.
So inside his circle, you'll find businesses like Coca-Cola or Gillette. The questions he asks are basic but powerful. Can I explain how this company makes money in like 2 minutes? Has it been profitable for a long, long time? And is it going to be around and still be important in 20 years? If the answer is no, or even maybe, he just moves on, no matter how hot the stock is.
The second lens is all about management. Because let's be honest, you can have the best business in the world, but a bad captain can still sink the ship. So Buffett looks for leaders who are smart with money, honest with their shareholders, and brave enough to say no to the dumb trends on Wall Street.
He's not trying to bet on some superstar CEO to come in and save a broken company. As he says, turnarounds seldom turn. The big takeaway here is he'd much rather buy a wonderful, easy-to-run business at a fair price than a struggling one at a bargain basement price. He avoids the hard problems.
Okay, lens number 3 is the financial tenet. This is where he looks at the numbers. But, and this is key, he totally ignores the stuff that Wall Street gets obsessed with. He's looking for real, genuine, cash-generating power.
He zeroes in on return on equity to see how efficient a company is. He even created his own metric called owner earnings, which is his way of figuring out the true cash a business produces. And he is super skeptical of companies that have to borrow a ton of money. For Buffett, if a business is truly great, it shouldn't need a mountain of debt to grow.
And that brings us to the final lens, the value tenet. And this is pure 100% Ben Graham. After a business has passed all the other tests, it all comes down to one simple question. What's the price? Can he buy this great business for way less than it's actually worth? That gap, that's his margin of safety.
He waits. He's incredibly patient. He's waiting for those moments. A market crash, some bad news that spooks everyone, a temporary problem. These are the unusual circumstances that let him swoop in and buy a wonderful company while it's on the discount rack. He's not trying to time the market. He's just waiting for the market to offer him a price he can't refuse.
But look, all the analysis in the world doesn't mean a thing if you don't have the right mindset. And this final piece, mastering your own psychology, this is probably Buffett's real secret sauce.
To explain it, Buffett loves to use a story that his mentor, Ben Graham, made up. It's about a character he calls Mr. Market. I want you to imagine Mr. Market is your business partner. The only problem is, he's a manic depressive with wild, unpredictable mood swings. So every single day, this emotional partner of yours shows up and names a price. Some days he's euphoric, and he'll offer to buy your shares for way more than they're worth. On other days, he's depressed and terrified, and he'll offer to sell you his shares for pennies on the dollar. The whole secret is to use his moods. You buy from him when he's scared, you sell to him when he's greedy. And on all the other days, you just ignore him completely. He's there to serve you, not to guide you.
In this chart, this is the result. This is what happens when you ignore all the daily drama from Mr. Market and just stick to your principles year after year. When everyone else is panicking, Buffett sees a buying opportunity. When everyone else gets greedy, he sits on his hands. That emotional discipline is the engine that drives these incredible numbers. This quote from George Bernard Shaw just nails Buffett's approach perfectly. In the crazy, emotional world of the stock market, Buffett is that unreasonable man. He doesn't adapt to the market's foolishness, he just sticks to his own rational principles, and eventually, the world comes around to him.
When you look at his whole career, from conquering that fear of public speaking to his entire investment strategy, it's all about tackling those one-foot hurdles, the simple, solvable challenges that are right there in front of you. And that's an idea that goes so far beyond just investing. So the question I want to leave you with is this: what's the one-foot hurdle you can step over today?